The Indian economy is now at a critical juncture. Massive changes are taking shape in various economic sectors and markets, and the country is geared for orbital shifts. Our nation's journey towards becoming an advanced economy is drawing strength from a unique blend of factors, and these factors would include a young and a dynamic population, a resilient and diverse economy, robust democracy, and a rich tradition of entrepreneurship and innovation. The Indian economy, as all of you would know, rebounded strongly from the COVID-19 induced contraction, growing at an impressive annual average of 8.3% in the last 3 years. For the current financial year, the Reserve Bank has projected a growth rate of 7.2%. The IMF has also projected India's growth prospect. They have in fact revised their growth projection for India upwards and have now placed it at 7%. And 2 days ago, the World Bank has also upgraded India's growth forecast to 7% for the financial year 24-25. So as you can see, I think the projections made by all the agencies, international agencies, as well as the Reserve Bank, I think our perceptions and projections are converging. The National Statistics Office, that is the NSO, has placed India's GDP growth at 6.7% in the first quarter of this year. Now, naturally, that has raised some discussion and about whether the 7.2% projected by the Reserve Bank would actually materialize or not. Now, let me clarify and let me explain this entire aspect in slightly, in some detail. Now, notwithstanding the moderation in growth from the previous quarter and being below our projection in Q1, the Reserve Bank had projected 7.1%. The actual growth number has come to 6.7%. Now, the data actually shows that the fundamental growth drivers of the Indian economy are actually gaining momentum. They are not slowing, they are gaining momentum. This gives us the confidence to say that Indian growth story remains intact. And I would like to emphasize this point. Private consumption, which is the mainstay of aggregate demand, with a share of around 56% of GDP. 56% of the GDP is attributed to or comes from private consumption. Now that has grown at a rate of, in fact, that has rebounded to 7.4% growth from a very feeble 4% growth in the second half of the previous year. That is 23-24 in the second half, private consumption grew by 4%. First quarter of this year, private consumption has grown by 7.4%. This reconfirms the revival of rural demand. FMCG players, FMCG companies, if you talk to them, the data which comes out shows that clearly the rural demand is picking up and has picked up. The other important driver of growth, now apart from consumption, which accounts for 56% of the GDP, the other important driver of growth is investment, which accounts for 35% of GDP. Now, investment has grown at 7.5%, keeping with the recent momentum. So more than 90% of the GDP, that is private consumption 56% and 35% coming from investment. These are the drivers of the GDP calculation. Now more than 90% of the GDP expanded at a robust pace and materially above 7%. The headline number, however, came lower against the backdrop of muted government expenditure of both the center and the states, perhaps due to the elections.